Well, I think the bouncing in the market that we've seen is a reflection of just how much investors, I think, are grasping at any sign of slightly more certainty where we're headed, whether it's on tariffs, whether it's on negotiations. If the fact, as you were pointing out, Joe, that an announcement of an intention to make an agreement about a memorandum of understanding moves the market, that's how bad things are. I wasn't actually in this meeting when Secretary Bessent talked about de-escalation, talked about the need for one side to climb down. I think he didn't assume that it was going to be the United States climbing down, but I think investors mostly expect that if we're going to have some agreement this quickly, these are trade agreements that are very complicated and take months and years to really negotiate and hammer out. But if we're going to come down, if we're going to strike a deal very quickly, it means it's going to be something of less substance.
Wow, well, that's really interesting because the president said, with the idea of a trade deal, as Bessent himself suggested, could take 2 or 3 years. The president said we could have new tariff rates for China in 2 to 3 weeks. Is that the U.S. climbing down, and does that make you feel more hopeful?
Well, I don't want to contradict the president, but it does seem hard to believe that that's what we're going to be doing.
Okay.
The confusion in the market right now is nobody expects that 145% tariffs can be permanent. And I think we're hearing that, and that was reassuring to people because it's just not sustainable. It is an embargo, effectively, as Secretary Bessent said. But the real question is, will we have more certainty on the other side of things? And there is a world in which you look through the fall, and there's a budget deal, and the debt limit is behind us, and we have half a dozen of these framework agreements in place. And so you know what kind of range we're dealing with, and that's a much better world. But the question is that the new steady state, or do new things get put on the table?
Well, and as you suggest, this idea that no one thinks we're going to stay at 145% forever, I wonder how much can change, though, even if that no longer remains the rate in terms of our fundamental relationship with China, knowing already there was an effort to diversify supply chains away from China because of the scars of the pandemic. You have news today, Apple is going to look for all of the iPhones it sells in the U.S. to be made in India by the end of next year. Changes are already underway. Can we ever really revert back to any kind of at least what was the norm?
No, I think the old norms have been broken, and I think we are moving into a new kind of arrangement. What that really looks like in the end is hard to predict, but I think it is, a decoupling of sorts. We used to tell companies that you need a China plus one strategy, so you should build a factory in China and then one outside of China. I think companies are now looking at a U.S. plus one strategy where they have to, the India deal, the India announcement at Apple is to bring product into the U.S. from India rather than from China.
Well, this is all happening with financial ministers and leaders from around the world coming to Washington for the spring meetings of IMF, World Bank. This is a peculiar moment for all of this to be unfolding. We're talking about what Scott Bessent said behind closed doors this week. There are a lot of conversations happening behind closed doors. And I wonder what you can share with us. What are you hearing that didn't get into the front page or onto the Bloomberg terminal? When it comes to concern, when it comes to uncertainty, what is the general feeling with world leaders this week?
Well, I think the measure of how grim things are is that the session that I was in on the Middle East is the most optimistic. Wow. That we might have an Iran deal, and that could really go a long way to...
Imagine saying that 3 months ago.
But it gives you a sense of the uncertainty about everything else, whether it's Russia or China or U.S. policy, or indeed a lot of our foreign friends are really looking at what's happening in the court system, what's happening in the regulatory system. Lots of questions about the Fed until the president backed off on that. And a real sense of, is the United States the same business model that we've all come to love and invest in over the last several decades? Those things don't change overnight. It takes years for things to change dramatically, but the things that made the U.S. so consistently innovative, dynamic, and able to grow so quickly people are questioning.
I'm glad you raised the Fed, too, because as we consider what changed this week, we did start the week not knowing if the president intended to fire the Fed chair. And then he said he had no intention, never had any intention of that. So maybe clarity on that issue, at least for now, Christopher. But he still maintains, even if he's not going to try to oust Powell, that he thinks Powell needs to move now, that he risks being too late. And I wonder, with the economic picture you are seeing, if you think there might actually be some merit in that argument, that monetary policy simply isn't going to be able to react quickly enough to whatever it is we're heading into.
Well, I think my view, and I think the view of a lot of investors that I talk to, is that the best thing you can do right now is to sit tight. you probably want to. You certainly don't want to think about raising rates right now, but you want to know where that level, where the steady state is going to settle. I mean, if you could sort of start knowing where tariffs will be and start modeling that and sort of thinking through where that will feed through to either inflation or slowing growth, that's one thing to do, but you don't know where that's going to settle, and the president isn't helping things, unfortunately.
Would it do damage to the Fed's image if we did get a cut right now?
I think it would.
What if Jay Powell said, okay, 25 basis points, stop calling? What would be the market reaction?
I think it would probably be positive for a day and a half, but overall negative.
Then who do you trust?
I think it starts to undermine the Fed's credibility because, we've had the Fed, it's been remarkable through all of our political discord. I don't think anybody credibly attacks the Fed for being politically motivated one way or the other over the last several years. The unfortunate thing right now is whoever is nominated to replace Jay Powell next year is going to come with a sort of a shadow of suspicion of what kind of a deal did they strike to get the job.
If not a shadow chair, which we've talked about before, Kaylee.
Yeah, that's certainly an idea that has been floated at this table by the now Treasury Secretary, Scott Bessent, actually, of all people. To this notion of credibility, though, it's one thing to consider the Fed's credibility. It's another thing to consider just the credibility of the United States. We have a new story out on the terminal today looking at the dollar. Could be the worst first 100 days the dollar has seen since the Nixon administration. We all have been paying attention to what's been happening in the bond market. And we haven't even really started the debt ceiling fight yet, Christopher, which we have to look forward to in the next few months. Do you see a serious risk of an undermining of the creditworthiness of the United States or the view of creditworthiness of full faith and credit?
Well, as you know, creditworthiness is incremental and there are shades of gray. I don't think things are about to fall apart. I think the dollar is still the world's reserve currency for a long time, given the lack of alternatives. But we clearly haven't done ourselves any good. And it is one of those things on the margin where I think investors start looking at the U.S. business model. They go back, portfolio managers are going back to meet with their investment committees over the next few months, and they're going to say, what's our exposure to the U.S.? 60%, 70%? Let's just take that down 5 or 10 for now. It's going to be a brave portfolio manager who goes to his credit committee and says, let's just double down on the U.S. because we think they've got something good going on right now.
I wonder your thoughts in our remaining couple of minutes here on a series of unilateral deals emerging here. We're talking frameworks. Let's say they do emerge as deals. This seems to be a best case scenario for Wall Street right now, but it's a pretty darn confusing mess to consider how this White House could negotiate them all simultaneously and how they would all potentially argue with each other in the end. Do you worry about that patchwork being the final product here?
I think it's a big worry right now. I guess the glib answer to your question is maybe AI will help them negotiate all of these deals at once.
Maybe.
But I think it is. I mean, actually, that's probably the encouraging outcome because as long as you don't have a single principle you have to apply to all of your negotiating partners, you can cut separate deals, and then investors can understand what the rules will be. But it is certainly a different framework, and it's not the more integrated, freer-flowing goods and financial flows.
That's a rewriting of supply chains.
That's a rewriting of supply chains, and it's a shifting of the system and the rules we've been used to since the end of the Cold War.